The Grand Auto Loan Alchemy, how to turn your signature into a shiny new carriage. Friends, lend me your ears, for I have a secret that would make a riverboat gambler blush. Did you know that when you walk into a dealership to fetch a new set of wheels, the bank isn't actually lending you a single copper cent of their own money? Ha! It's the truth. Your very own signature on that promissory note is what creates the credit. You are the one funding the transaction, yet the banks have the audacity to deny you based on creditworthiness for a loan they didn't even provide. If they aren't risking their own gold, how can they legally tell you no? It is a grand illusion, a financial sleight of hand designed to make you pay for your own money, twice. Now, let us look at the law, that sturdy shield for the common man. Under the Federal Reserve Act and the Uniform Commercial Code, your signed note is a negotiable instrument, which is just a fancy way of saying it's as good as cash. Once you sign, the bank treats that note as an asset, monetizes it, and often sells it off to investors before you've even driven off the lot. According to the Truth in Lending Act, they must disclose exactly where the funds are coming from. If they tell you they're lending their own money when they're actually using your signature, they are dancing on the edge of criminal liability. Why? It's enough to make a man wonder if the bank belongs in the vault or behind bars. If the bank tries to play the villain and denies your loan, don't you dare tuck your tail. Under the Equal Credit Opportunity Act, you demand a written explanation within 30 days. If they aren't risking their own capital, their risk-based denial is as flimsy as a paper umbrella in a thunderstorm. You can send a qualified written request demanding proof that they used their own coin. And if you've already been approved? Well, that's when the real fun begins. You can challenge the loan's validity using consumer law, demanding the original wet ink signature note. If they've sold your debt and can't produce the original, they may lose their legal standing to collect a single dime from you. But beware the repo man. If they threaten to snatch your carriage, you must strike first with a debt validation letter under the Fair Debt Collection Practices Act. They must prove they have the legal right to take it, and if they can't produce that original note, their repossession is as unlawful as a midnight raid. You have the power to rescind the contract within 72 hours in many cases, especially if they practice deception. Don't just scream at the salesman, he's just a pawn in the game. Put it in writing, send it certified, and prepare to battle. You can legally discharge that debt and keep your car for free if you know how to wield the law like a master swordsman. Please subscribe so you will be notified of new uploads. Press the like button, it helps our algorithm. Thanks for watching.